This is the weekly review for the week of July 25th to July 29th. Um, so coming into this week, I did not have a bias because last week price was just range bound, and that actually continued this week. But even though we were range bound, we had quite a few clean trade opportunities. So starting on Monday here, let's see, we had no setup, or we had a setup on Monday, but there was no entry. The entry came on Tuesday. So Monday ran up and took previous day high liquidity, and we had a SMT with the dollar index, and we created a setup here, breaking market structure on the M5 all the way to the H1, and we formed the M15 fair value gap here. So on my high time frame chart here, this is just a little bit cleaner. And basically, at the end of Monday trading session, I noted that I was going to be looking for a short entry tomorrow, so that being Tuesday, in a kill zone, since we set up this M15 fair value gap here, right? So going into Tuesday, I wanted to make sure that I could get an entry in a kill zone. I didn't want to just go to bed and put a limit order here, and then it would get triggered not in a kill zone and stop me out or something like that. So on Tuesday, I woke up at 2 a.m., which is the time London session starts for me, and I just set a limit at the M15 fair value gap right here and went back to sleep. I could have refined that entry a little bit more, because here we had an M15 fair value gap, right? So initially Asia came up and we had a GU SMT. GU took the New York high, but here on EU it didn't. So we had a SMT here, broke down, and then have a fair value gap here above the 12 a.m. price. So this was a beautiful classic sell day template, and I got in right here. Could have set my limit a couple pips higher inside this fair value gap, and then I used previous day high as my stop loss, and I was basically targeting previous day low since I was bearish, and I took a partial here at the low hanging fruit liquidity, so the swing low prior to the RTO, and then I took the rest of the position off at previous day low. Now we ended up dropping like a rock even further, all the way down to Friday low, and then the equal lows that I was looking at or had my eyes on last week here. So these ones here. And if I recall, I think I took a short here last week that stopped me out because I was anticipating price to roll over here. But last week, again, we took these equal lows, and that's why this short here didn't work. So now eventually this week, we ended up cleaning these equal lows and coming into this daily fair value gap here. Now, one of the other things that I marked out on Tuesday was I was initially looking for a long to see if it was going to play out, and the long didn't end up playing out. We actually had a short play out. Now, the logic for this short doesn't really make sense to me because we already took this liquidity. And maybe it's because the time of day here, this is 8:30, so the long here, basically I was anticipating price to come up into at least premium of the range that it formed from the high to the low here, the high prior to the sell-off, and maybe an institutional order flow entry drill short. But the thing is, we already took all of these 3 liquidity targets, so I wasn't too sure if it would make sense to short, because again, this is already, like, we took all the liquidity targets that we could possibly take. So that's why I was looking at this long here, but that didn't end up playing out. We actually had a short play out with the SMT here, breaking market structure, and price went lower into this daily fair value gap. But this wasn't a very clean short, in my opinion. So moving on to Wednesday. Wednesday was FOMC day, and we started off New York session with a short entry. Now, I didn't take this because it was FOMC day, but this honestly was super clean, and if I had seen one more piece of this live, I probably would have taken it. And that's the fact that price, this wick here that rated London high here, that literally went right to the pip into premium. So just the range here from the sell-off yesterday, so previous day's range from that low to that high, right? We have a fair value gap here, and price went right up into premium. The high of the candle being 101,720, and the mean threshold is 101,720, so that was perfect. Honestly, if I saw that, I probably would have taken this trade because we came up, formed a bearish mentorship setup inside a fair value gap after price went just tapped premium on the daily or from previous day's range, and then boom, here, target, sell side, liquidity equal lows. So this was a very, very clean trade and sound logic, in my opinion. And then we had FOMC, which actually also presented another clean trade. But I wasn't looking at EU because ICT was tweeting about indices, so I was just looking at indices. But basically, we had a raid of previous day's low here. It's going to probably be cleaner in this chart. A raid of previous day's low with SMT on GU, and then we had an M15 break in market structure here prior to FOMC, and then FOMC came back down into the breaker and fair value gap here. So another very, very clean setup, and obviously this was in clear discount here, fair value gap and discount, breaker and discount. So price initially came up for a bearish setup in order to go lower and fill in or completely close in the daily imbalance here, and that's what caused price to now create a bullish setup and FOMC to take it higher. So I felt that that was pretty clean and logical, most importantly. So coming into Thursday trading, we had another bearish setup here. You can see price is in a consolidation. We had a rated previous day high. The only thing was that there was no SMT here, which is why I didn't feel comfortable taking the trade. There was an SMT with the RTO, but obviously you can't know that until price starts falling off. So the rate itself didn't have an SMT, which is why I didn't take this. But in my journal, I noted that I felt the FOMC move was going to be retraced, and that's what ended up happening here. And this one down here, this M5 setup down here is what, or is the setup that ICT noted. And I was looking for the same setup and using the same logic that price was going to retrace into premium. So after this move down, right, I think this is the premium of, is it? Maybe I use this. Yeah, probably use this displacement leg. So this high right here, and this one is a H1 fair value gap. So ICT was targeting this as well, and he noted this liquidity here. So even before I saw him tweet about that, I was looking for a long. The only thing was that my eyes were not drawn to the chart until we had this candle here, right? ICT entered on this fair value gap. And yeah, this was a setup here. We had an SMT here with GU. Even though we didn't take any liquidity here, it's just that relative to FOMC, EU retraced much lower and almost took out the FOMC low, where GU did not come even close to taking the FOMC low. As you can see, this is the FOMC low. GU went maybe about the mean threshold of the whole FOMC move, where EU went all the way almost to the bottom. But yeah, ICT took this trade with the logic that it was going to retrace into premium and this H1 fair value gap and take out this liquidity. I was only looking for the trade after this candle right here, this huge bullish candle on the M5. And then I was basically mapping out from that swing high to that swing low, premium and discount, and it never came back to discount. So that. And I had a limit right here, and I was going to target that. But the real entry was down here after this little break in market structure here. Now, eventually, price did come back into this fair value gap after returning to the H1 fair value gap here. In my journal, personally, I noted that I didn't take this trade. I just, marked it out as I was observing. But in my journal, I felt that this wasn't as high probability as this one here because price already came up into premium and into the fair value gap. So how would we know that this isn't an institutional order flow entry drill to just take price lower? And not go higher. Now, interestingly, on GU looked more bullish than EU. And I felt that we were in a market maker buy model here on Thursday, which it ended up turning out to be true, but the setup itself was pretty sloppy. Here we had the initial RTO into discount after breaking market structure, and we took the low-hanging fruit and we broke market structure there. And I got in at this fair value gap here, but price ended up retracing much deeper and just consolidating before moving and after London close session and then taking these equal highs here. So I think that this just was not a very clean price action. The logic of the trade, though, made sense, even though it didn't play out, or the trade played out, but the trade logic played out, but my trade itself didn't play out. So yeah, and then Friday came along. Friday on GU was very, very clean. EU not so much. So Friday for GU made the high of the week. EU did not make the high of the week on Friday, but we still had a setup. We had an SMT here with Monday high. So EU didn't take Monday high. Probably could see it better here. That's Monday high, where GU took it because it made the high of the week. So there was an SMT there, and price broke down. Also took previous day high liquidity, but there was no clear PD array here to short at. And also these entries were not in a kill zone, 5 a.m. and 6:55. So this was not very clean here, where the GU entry on Friday was beautiful, but it was in London session and I wasn't up for it. So we made the high of the week Friday, took liquidity from previous day high SMT inside a daily fair value gap that we completely closed in, and then broke market structure, formed a mentorship setup here, low hanging fruit break in market structure, institutional order flow entry drill, and then target equal low sell side liquidity. So that was beautiful. Then coming into New York session, I tried to get a short in here, and my short got swerved. On just the M15, I mapped out premium and discount, and I put my limit at premium at the 50%, and we fell a few pips short of it inside this H1 fair value gap. It was also above the 12 a.m. price, which I liked, but yeah, it just got front run on that entry. And I was basically targeting these relative equal lows down here. That I would have taken a partial here at the these equal lows, and then these ones here. I didn't think that previous day low was going to be taken, since previous day high was already taken, and it's rare that both sides are taken. But we ended up taking previous day low as well. So because I got swerved on that trade, on EU, I got in on an institutional order flow entry drill in premium here. I believe, is that it? Yeah. No, it was this one relative to, yeah, previous day's range. Yeah, so this equilibrium here relative to the previous day's low and the high made today. So after we broke market structure of the low hanging fruit here, I got in on this institutional order flow entry drill, and I just targeted this short-term H1 fair value gap low in discount. And price ended up going a little bit lower, and we had a SMT with GU with previous day's low, and basically I was just watching both EU and GU to get a long entry here, mainly GU because GU had the raid and GU made the high of the week on Friday. So just based on the power 3 logic of the daily candle and the time of day, we made the low here at 10 a.m. So if between 10 and 12, which is London close, we're probably going to have a retracement to the mean threshold of the daily range just to close out the daily candle. But there was no fair value gap entry either on EU or GU here. So we had that break in market structure here, and I was just waiting. There's no fair value gap, nothing, and then price just took off into premium, taking this buy side and up here in this fair value gap. Same thing here. No fair value gap entry, nothing, and price just went up into premium. So yeah, the logic was good, but there was no entry made available. So even though we were in a big consolidation all week, there was still a lot of logical trades to be had. And I feel like I probably should have taken more setups than I did, because I think it might just be the confidence thing of it and the psychological factor that why I didn't take all of them. But the vast majority of them would have worked out. So that's something that I have to keep in my mind, because I struggle with that when I trade live. But in terms of next week, what my observation is that we formed a daily swing low inside this fair value gap, which is bullish. And ICT noted in one of his market review videos that this daily fair value gap here is kind of the turning point for bullish and bearishness. So if we break below the fair value gap, he said we were going to come for this low, but as long as this fair value gap holds, we're going to be bullish and go higher. So the fact that we formed a daily swing low inside this daily fair value gap is bullish, and we've been respecting bullish PD arrays here. This H4 fair value gap right here, and then this H4 fair value gap right here are being respected. And we have a ton of equal highs up here, these triple equal highs, and then this is a weekly high here, and also equal highs with these 2 days, and also this high right here. And all of these highs are right under the daily fair value gap and premium of the daily range. So I'm expecting price to come up here and take all of this liquidity. Now, I don't know if it's going to reverse or not. Like, if it does present a setup, I'm definitely going to take it. But I don't know if I don't think it's just going to come up here, raid this, and then go down. I think that we're probably going to dig deeper into this daily fair value gap and daily order block, because DXY is relative to EU much weaker. So EU still hasn't gotten into premium of its daily range, where DXY is well into discount of the daily range. To put the OTE on here, we have this is a daily order block and this is a weekly order block. So I feel that price could, since we're already in here, price could potentially come lower into OTE and into these order blocks, which would mean that EU is going to push up higher into its respective daily PD arrays. I don't know if we're going to make it up to the order block. We'll have to see. But definitely on like Monday's trading, we're probably going to end up taking all of these equal highs here. And in terms of the news, we have high impact news every day of the week. Now, honestly, I don't know if this is actually high impact news, because a lot of times with these high impact news, like if it's not NFP, CPI, or FOMC, it doesn't really move or anything. But I'm just going to still keep a watch. USD news every day of the week here. So yeah, I don't know, since it's happening every day of the week, I don't really know when the high of the week, I'm not anticipating the high of the week or low of the week to form at any single day. To be honest, I don't even know if it's going to be a bullish or bearish week. I can't really determine that. I just know that, or have a feeling that all of this buy side liquidity is going to be taken out. You know, whether we form a setup here and have a short-term bearish trade and then continue going up, or form a setup here and then just completely fall off a cliff, I don't know. That's going to be determined with next week's price action. But yeah, as of right now, going into Monday, I'm really just going to be watching for a setup, a bearish mentorship setup here, with all of these equal highs above price on Euro.